Getting into the NowCast model, if we, thank you, Celts, for pulling that up. I'll let you guys read that question in its entirety. But really, it was around kind of the influence of retail sales data. Perfect. So the answer is retail sales is one of many factors. Really, there's 30 features that backtest as statistically significant with respect to predicting the rate of change of real GDP growth. So there's 30 factors in the NowCast model. Unfortunately, I'm not going to give you all those 30 factors, but retail sales is certainly one of them. And as I've mentioned here, as well as on Twitter, these big market events really should be simply reviewed as a single data point, right? This data point updates the model and adjusts the nowcast accordingly, or doesn't. So sometimes they're a bigger factor than others. Sometimes the number that comes in might adjust the nowcast model in one direction or another from a rate of change standpoint, but oftentimes it might not move it much at all. So these events are best prepared for, in my humble opinion, in the following three ways. Be aware of the economic data and when it comes out. Review that data against our nowcast model, and 3, assess the market's reaction. I think those are really the 3 big points from any of these market economic events that are coming out. Everybody's eyeballs on CPI, PPI, retail sales, the labor reports, et cetera, right? There's these events with the Fed's FOMC meeting, what their decision is. So many of these events really just become noise. And if you can just simple it down to reviewing the data as a single data point and understanding kind of, that it will influence the nowcast model. And if that nowcast model has a big move, I can guarantee you the macro team is going to be flagging that and highlighting that for you, right? So Keith on the macro show, the rest of the respective team, if you're macro pro sub or have any of the macro kind of content, that's going to get disseminated to you. So that I know for a fact will happen. And from there, right, it's reviewing that data and then assessing what the market's reaction. I think that's really one of the bigger things inside of from a portfolio management and a risk management standpoint. It's reviewing what the market's reaction, regardless of what your take is of what the market should do. The market doesn't give two shits of what you think or how you're positioned. So adjust accordingly, position accordingly, and pivot accordingly, whether you're long, short, or neutral. These events can be risk managed in many different ways. You can try to, put on some positions to take advantage of these, potential market moving events, or you just stay neutral, right? And you just kind of take a step back and you don't really have anything going on. Earnings events can be reviewed as in a very similar manner, right? These earnings come out. You might think they're good or bad from an analyst conversation or the signal, but really at the end of the day, it's an event, right? So, in my humble opinion, at least how I often manage it is, staying away until the data is out there and then assessing what the market's reaction is. If it's positive or negative, and I have an opposite or similar view, then you can kind of lean into it, right? And take and put on those positions after the fact, and after digesting what the data has, or how the data, or what that data is, and how the market has been reacting. Just in terms of the NowCast model, just to kind of finish off on this point, we do provide the rank order of the NowCast model inputs to Macro Pro subscribers, and it's updated anytime new data is released. So again, I understand many here or aren't Macro Pro subs, and it's the highest price point, and I get that. But you do get what you pay for, right? So if you're interested in understanding how the NowCast model works and sort of the inputs that one should be paying perhaps a bit more attention to, aka, let's just say the top 10, but realistically, you want to be paying attention to all 30 because they all influence and have a significantly, as I said, a statistically significant predicting capability in terms of a rate of change for the real GDP growth. But in terms of that rank order, that is dynamic and it does shift. So again, these many of the numbers, the final data points have come out for the month of November. I believe we're just missing one data point for the month of November, and several are coming in are still we're still awaiting for December. However, if you do get that data, you can see that the rate of change for December continues to be negative, and our NowCast continues to signal we're headed for zero GDP growth in Q2 23. Celts, if you don't mind showing that GDP chart for everybody, I think that's a great one. Exactly, perfect, bud. So again, just to reiterate this, the GDP year-over-year projections here, going from 1.94 in Q2 2022, we are now casting 75 bips in Q4, down to 43 bips in Q1, down to 9 bips in Q2, and then back up to 67 bips in Q3. So that's the NowCast model as it stands today. And just wanting to reiterate, Coach mentioned it yesterday in regards to the demand for oil and the drive, and that demand for oil goes down as GDP goes down. It's pretty straightforward. Awesome. Hopefully that was helpful.